What were your top key takeaways from Alibaba's earnings, Vey-Sern? Because you're talking about how Alibaba may have to prioritize investments over monetization.
Yeah. So I think if you look at the...
Why would they do that in a higher interest rate environment? But then I realized that in China, things are way different. Money is cheap.
Now, if you look at the results yesterday, the margins have come off across all their business lines, right? The top line growth is a little bit better than expected. It's not much. It's like 7%. But it's intensely competitive in China for e-commerce, right? It's not just the traditional e-commerce platforms like JD.com and PDD. We also have the short video companies like ByteDance that are selling stuff online. So Alibaba's growth has faltered. They do need to invest a lot more to drive that growth up. You recall they have a new management in place. So I think in part is to respond to the competition and also to expand overseas, right? Some of their competitors like PDD have started doing very well in cross-border e-commerce in their platforms like Temu, Shein. So Alibaba is trying to do that as well in the form of AliExpress Choice. So there's going to be a lot more investments, I think, in the near term, which will see margins kind of come under pressure, but whether that is sufficient to reignite revenue growth remains an uncertainty, I think, for the stock.
But what's that going to mean for free cash? Because they're going to be making all these investments. They've got their buyback strategy that is, incredibly intensive to try and shore up their share price. They're trying to get across all of these verticals. They made half the FCF that they did this time last year. And with all that competitive pressure, the one thing everyone points to is they've got a strong cash balance. Isn't this the leaderess to that cash balance?
Yeah, you're right. The free cash flow has come off a little bit this quarter, but there's also some seasonality impact over there. But the point is they are giving out a lot in the form of shareholder returns. They have bought back $12.5 billion worth of shares last year, which is equivalent to something like 6% of the market cap today. And they are also paying an annual regular dividend plus a special cash dividend, which comes up to something like 2%. So overall, about 8% shareholder returns. I think that's sufficient in the near term to kind of support the share price. Obviously, the ADRs came off quite a bit yesterday. There's also another catalyst for the stock, which is the getting their primary listing complete in Hong Kong by August. That can potentially allow Alibaba to be included in the Stock Connect program, which can drive some mainland flows into the stock, which can help to support the share price as well. But I think going forward, this is probably the toughest patch that they're going through. We should start to see growth recover somewhat in the second half of the year for the company.